Hi, this is Randy Finney with the Right Side of the Chart, and today is Friday, July 19th, 2019. It is a little less than half an hour to go before the close today. I wanted to do a video. This will be a pretty quick video on some trade ideas, all in the chemical sector. So, it's what I do most of the day. If I'm not answering questions in the trading room, trading personally, I'm looking for setups. That's what I do. So I came across a handful here, and these are what I like about this group is they're poised to move, and in other words, they're setting up, and then there's also a fundamental catalyst or potential catalyst. Now this is going to go either way. What I mean by that is just about all of these stocks are set to report, the vast majority of them next week. So within the next week or two, some are early August, some late July here, the following next week. So what that means is, birds of a feather flock together. These are all chemical stocks. You can see most in the sector have been in pretty powerful downtrends, bear markets now for over a year, and so they're pretty beat down. The number one, that top two things that tell you it's a counter trend trade, but I love counter trend trades, especially beat down stocks, because even if I'm not trying to catch a bottom in the bottom, the potential is certainly there for a short squeeze. The more stock falls, the more oversold it gets. Longer it's in a bear market, typically the more shorts pile in, and then when you have a technical and or a fundamental catalyst that causes the stock to go up, all those shorts that are in there get squeezed out, and then they're short covering. I don't know if you're not familiar with what shorting is. You borrow a stock you don't own, and so when you're short a stock, to close out that trade, you have to cover. And hopefully, the idea is to short high and cover low. And but in some cases, the stock starts going up, and those shorts, they call it a short squeeze. And then the problem is when stocks have a high short interest, when you cover a stock, you're buying the stock, so that buying then begets more buying, as it always does in trading and the stock market. The more buy orders on a security, the higher it's going to drive the price up. So it's a vicious cycle for a little bit until that short covering rally runs its course. So now let's just dive into the charts. You can see up here, I've noted a lot of these when they report. This one's a little longer. This was in the end of or third week of August 21st. AMC means after the market closes. SQM. This is a Chilean company, it looks like here, and you can see a nice downtrend line. I have the words ADL. That's the term I use for almost divergent low. For all intents and purposes, you zoom in, you see two little spikes on the candle, but that's the low right about here. You can almost put a horizontal line there. Technically speaking, positive divergence is when a stock makes an equal or lower low, and the indicators at the same time are making higher lows. However, for all intents and purposes, you have strong, much higher low here in the momentum indicators, the PPO and the RSI, and a roughly equal price on SQM. So again, you can split hairs. You can say, no, technically it's not negative divergence because the stock made a higher low, but it's so close that that's the way I view it. And you can see not a great, but a fairly well-defined downtrend line. I could even tighten that downtrend line up just a hair, come in and even capture these reaction highs and tell you this one's trying to break out. That a few days ago here it had an attempted breakout, couldn't hold it intraday. Volume was low. Remember, you want to see above average volume. So the sector to me looks poised to break out. And if it does, you can see these are my targets right here on this stock. Might have a little stop along the way I'll add for you right here. And what I'm going to do is look at both the daily and the weekly charts on these. Weekly chart on SQM. Nothing huge stands out, but the fact we are oversold here. This is not a great support, but it was a support level about 33, and we broke it. We back tested it once. PPO starting to curl up again. We're oversold, and the stock, it's already dropped 56%, and could get a kickback rally there. And again, it's just one of many. So what I'm watching for really is a group. The fact that a lot of these do report next week, you can see here, or the following week, I should say. This one's August 31st. That tells you that you're going to have pretty much you're going to have an idea on the sector, because a lot of these are the large components or top components in the chemical sector. And so just like we had a flurry of bank stocks report that this week, that kind of sets the tone for the sector when you have the majority of companies report. And it's either going to be good or bad. I don't know. If it's bad, they continue in their downtrend. You probably won't get the breakouts, or if you do, in a couple of these, they may be false breakouts. And why I typically shy away from stocks reporting around earnings. There's sometimes opportunities there, and during earnings season, sometimes you have to take those risks if they're calculated risks. And again, we'll let the technicals be our judge. Or our guide, I'm sorry. Let technicals be our guide. So here's one in a nice wedging type pattern. You can see the divergences below, positive divergence here on the daily chart. And again, a fairly clean downtrend line with some targets up above. I'd probably have to, some of these lines may have been old lines on the charts. I'd lower that first target there at about 46.30. And there's some potential targets. That's MEOH, Methanex Corp. Imagine they do things with methane, but who knows? They could do other things as well. Weekly chart trades well to the technicals. You can see these trend lines. You can see the divergent highs, negative divergence down on my indicators, and positive divergence is what I look for, for a possible trend change. It's a weekly chart. We don't have confirmed divergence. You see the PPO looked like it was poised to cross up, make a bullish crossover, but it didn't turn back down. But if we can get some upside traction here, and it all starts with a breakout on the daily chart, we could get that weekly divergence, which could lead to a pretty decent rally in these. So, they could be, if again, some of these charts start to play out and we get buy signals, we need the buy signals, then that may lead to longer term swing trades. And this one, has a potential to come all the way back up here at about the $15, almost $60 area. That'd be about a 40% rally. So, maybe something in it for your quick active swing traders, maybe something in it for longer term investors and trend traders looking for any kind of attractive trading ops with more favorable risk reward profiles, in my opinion, than things like the tech sector and the big FANG stocks right now. That's MEOH. That was the weekly. The next one up. Go back to the daily charts. We'll look at EMN, Eastman Chemical. I believe that's a spin-off of the old Eastman Kodak company. They used to make, film photography equipment, and so I believe that's the same company there, or at least a spin-off or derivative thereof. And you can see there's some, I'll give you a target here. There's not a hard line, but somewhere around there. Pretty well-defined downtrend line. You can see all the reactions along the way. This one's had reaction, and it's testing now. And that's what I'm seeing here. A lot of these guys are bumping up against trendline resistance. And like I said, with the technical setup in place, the catalyst will most likely be, and it could be another chemical company that's related. Remember, chemicals, I'm not an expert, but I've taken chemistry, and I know enough to know that there's as many different industrial applications for chemicals as, the molecular, oh God, I'm tripping on my words, the molecular makeup of each chemical is. A lot of variance, in other words. So some of these might make chemicals that hospitals are buying. Others might make chemicals that are more sensitive to the economic cycle. I don't know. I haven't done my due diligence on these companies, but I wanted to point that out because most of these are bullish, and I have one short op for you that we're going to get to in a second. So there's EMN, Eastman Chemical, again pushing right up on the downtrend line. Looks like it's just waiting for a catalyst to break out. There's support not too far down below in case we do jog back down. You could have an objective entry if we don't get a breakout first. Maybe on another pullback to that 74.90. It's pretty decent support. You can see all the areas, all the reactions there off that level recently, and then so you can go long there on 74.90 pullback with a stop a little bit below there, and or add on an impulsive break above there, and my target would be 84.40 right now. If the sector really starts to firm up, I'd give you some additional targets on these. And again, as always, whether I make them official or unofficial, the unofficial trades, because they're a lot easier for me to do a video like this and cover, I'm covering 9 stocks in this video. It would take a long time a very long time to mark up all the charts and compose all my notes and thoughts that I'm trying to convey to you in this video, put it in writing, list price targets, follow up on each trade, because official trades I always post a setup or an entry at the time, follow-ups when each target's hit, or a stop, and that's again, so official, unofficial. If I didn't like it, I wouldn't share it. So these are the setups I'm watching, and again, a little caveat there that can go either way. Even if some of these break out and trigger buy signals, and then again, look at if at least double check these earning dates, because I got these from Earnings Whisper. Earnings Whispers sometimes all the time, they try to forecast earnings, especially far out, and sometimes they don't update those. So I have seen where they report the wrong earnings date. So I just went off today, and that could change as well. And the point is, be aware if you're going to take a company, especially right before earnings, because that can obviously go either way if they meet or they miss or beat expectations. And EMN, there's a downtrend line I missed before right there that was broke out. You can see it, here's a lot of just trades well to the technicals. You look at these uptrend lines, you get these uptrend line breaks, trigger short entries, and there are big swings in these guys, by the way. The trends, 40+% drop right there. The next rally was about a 165% rally. From there it peaked, broke down this nice clean big rising wedge on the weekly, confirmed with negative divergence, and then that set up a downtrend for 36%. So this is trend trading, trying to capture these trends, 96%, and so far since it peaked, about a drop of roughly 42%. Down to support, you can see the support line, reaction number 1 right here, reaction 2, 3, several reactions here, and a reaction there when we hit that support level. Now it's set up in this wedge type pattern. Pretty strong positive divergence right there, just like you had this negative divergence at that recent high. And again, so the point I'm trying to drive home here is a lot of these are tradable. Technicals, you can just follow the charts here and these trend lines and things like that, and get in and out of these stocks appropriately. So on this one, it's poised to break out, but that's not a buy signal. In fact, it's at resistance. You've got this 40-week exponential moving average, does a good job acting as support on the way up, did there, and it's been acting as resistance on the way down. That's the red line, and then of course the more significant downtrend line. So this one either pops soon, or I could easily see it recycle back within this wedge and then break out at a later date. So maybe you keep an eye on it. If this doesn't pan out now, might pan out months down the road. And again, that's EMN reporting on July 25th. Next one up, FF, Future Fuel, had a divergent low right here, positive divergence at the low recently, and it's been moving up. It's already broken out, and it reports on August 9th. If it continues to move higher, I'd give you a target right about there would be my first target. And if the sector starts to get some traction to the upside, I think the next run all the way up here to about 1482. Try to quantify it for you there. You're talking about 8.5% to that first target, and about 23% to that second target if it gets there. RAYM, Rayonier Advanced Materials. This one I shared in the trading room as a potential setup. There's a couple things. We'll start out with the 60-minute chart. I shared this. We have a nice clean downtrend line here. You can see the reactions, one there, a couple up there, and we popped it today. And I listed that 558 would be the first target resistance. We did hit that, and then at the time we hit it, I said we hit it, and we could very easily consolidate and reverse off that level, which we did, because resistance is resistance until it's taken out, and that's usually how stocks go. So this one, you can see that level there, all the reactions, and it's pulled back, and now it's back testing this 60-minute downtrend line, and it has pretty good support here, about 497, and that's divergence down there on the 60-minute chart. Come out here to the daily chart, which is more significant, especially for swing trades. I say you want to see a solid break and or daily close above a downtrend line. So here's our downtrend line on the daily, capturing 1, 2, 3, 4 candles, the top of all 4 candles there, 5 candles, 6 that top of that candle there, and today was just a intraday break, whipsaw signal on the daily. But you can see nice divergence, PPO starting to turn up, so it's poised, ready to go, and there was some good volume. You can see volume starting to pick up lately. You see these volume bars all, so that tells me that looks like the stock is starting to be accumulated. And again, the momentum indicators is telling you that downside momentum is slowing. That's the whole point of a momentum indicator. That's what divergence is. That's positive and negative divergence, not magic. It shows you that the momentum is waning in one direction. In this case, this is positive or bullish divergence. Get ready for a trend reversal. So if it pops, my first target there is 624. I'll probably add some other ones. I'll give you a level now. That's not a target at this point in time. That's just an old resistance level. 682 would be the next stop, and then look at the weekly chart here. And what stands out is we had a couple reactions there. We dipped below. We've overshot that. We are oversold. That in itself is bearish. It wasn't a solid support level. You only really had 2 reactions, one here, and then you didn't even really have one here. You just went on through it. But if we can recover that level, I think this one's set up for a nice short squeeze. I think you probably got a lot of shorts. You can see that big candle right there. Once it broke 584, looks like we had a washout capitulation selling in the longs. You can see a lot of volume there in the last couple days. So maybe some capitulation selling with some buyers stepping in too, starting to accumulate the stock. And again, we'll look at the daily chart, and this one reports August 1st. So if it does break out, and some of these may break out before they report, if the earlier companies reporting in the next week or two start to come in with some good results, you're going to see momentum come into the chemical sector. So that's why I wanted to get these out to you guys in advance. And whether I add any as official trade ideas or not, you can see the ones that look good and are poised to break out, and the levels to watch, and the earnings dates and all that, and kind of take it collectively. And, I'm showing you my top 9 that I like in the sector, and you might only pick 1 or 2 if you even decide to take any of these. But if you do, keep an eye on the whole group. If you start to see, quite a few, getting beat up after earnings and continuing lower, then you're probably not going to see the others break out. And if the others break out, those breakouts may fail. VHI, there's not a lot on this chart. It's just a company I've traded in the past. I've traded this one quite a bit. I haven't touched it in the last couple of years, but it does trade pretty well. There was your most recent divergent low right there, bullish divergence, and from there it's rallied. And I haven't even updated the chart. These are old lines on there, except the one I just added. 81% rally. So you see it's a very what I call tradable stock. This time around, I had that line there from back on a while ago. When did I put that line there? Created back in April, it looks like. And you can see just a beautiful little clean uptrend line right there, in which to trigger the short sell signal after the divergent high was put in, and just a nice drop. So again, it trades well to the technicals. I'm sure I could probably find a downtrend line that triggered that breakout there if I want to play around with it, something like that. And that's it. So we had the divergent low, and popped above. This was resistance. It was a target, or would have been if I was watching at the time, 284. Popped above it on a momentum fueled overshoot, and it would still be the next resistance target next time around. If we break over that, that one could run from there. So I would say next target would be about 450 or so right there. And on this, I like the fact the PPOs cross above that 0 line. Looks like it's starting to curl up. When it's down below the 0 line, the trend is bearish. When it's above the 0 line, and I'm referring to the 9 EMA, the white line, second of 2 to cross, then the trend is bullish. Bearish trend, bullish trend. Pretty easy stuff. Two more to go. That would be HUN next, Huntsman, and same story here. A nice big old divergent low, positive divergence on this daily chart we're looking at. Some pretty clear levels to watch. We also had a pretty good divergent low right there, big steep. See, there's it's a lot like the indexes right now, the stock indexes. You have these little divergences, which then you continue on to form bigger divergences. So you had a small divergent low there. In fact, when I look at this chart, I see a nice, clean, beautiful wedge. Man, I wish I would have saw that stock back there. Look at that beautiful, well-defined, lots of reactions. Steep, the steeper the wedge, usually the sharper the move that comes. Big, strong divergences like some of these now that I'm showing you. And then pop. And when that one popped, we won't even go from the lows. We'll just go from where it broke out. You were looking at a quick 32% gain in a matter of about a month and a half. Then it hit that level again, 25.52, and at the time, yep, you got it, divergent high. You don't always have to have these divergences at the highs and lows, but they certainly help to identify the major inflection points. As you guys know, it's a big part of my trading. But again, they're not always necessary. It just helps to confirm those moves. So the divergent high from there, that played out for about a 32% drop. And again, that ended with a much larger divergent low now. It's been moving up since, tapping on this 21-ish level right there, about 2107 or so. And if it pops that, that would be your next logical target or resistance area, again about 25.50, and that would be from breakout above there about 21 or so percent, and quite possibly if we can take that level out, we come up here at about $28. Let's look at the weekly chart. You can see it trades well on the weeklies as well. There was that downtrend line I had on the daily, I think back. No, this was a different one. This was a weekly chart. That was much longer, back in 2016. There was another steep wedge, divergence on the RSI. This was that last one I showed you on the daily there, that beautiful little wedge. Sometimes, they're not going to show as clean on the weeklies. You're not going to see that divergence on the daily was too small to show up here. But so that's what we're looking at now. So we have the divergence on the daily I showed you as well as a weekly. That shows through. This is the same divergence as I just showed you on the daily chart as well, from the same points, that low back there from late 2018, early 2019. And so this weekly chart, projects for a potential trend trade that could last months. And again, I already showed you the targets. Here's another potential target here, that downtrend line on this weekly chart. And then I think these are about the same two targets right here, these numerical values that I showed you on the daily. And finally, here's one that looks to me more like a short. Let's go back and start the daily chart like we did on all of these. APD, Air Products and Chemicals. Here's your uptrend line, not super well defined. I can play around with the line. Right now I have it coming off this low right here, but I can pull it here, capture that reaction low, and then it comes in a little better on that reaction low there. So let's just leave that for now. And so you can see this one's ready to trigger a sell signal on a solid impulsive break below 223.50. Maybe give it a little bit of room there, plus the intersecting uptrend line, and that would bring it by. I have minor support here about 215.88. We'll call that 216. But I think a realistic swing target here is all the way down to about 210, and quite possibly here at about 200 or so. And you can see, just as all the rest were confirmed with positive divergence, this one is confirmed with negative divergence there. And then to jump back to that weekly chart, you have a very high level PPO pending bearish crossover. PPO has never been this high in at least a decade that we're looking at here, and you get those high level bearish PPO crossovers. Quite often they can act as pretty good sell signals. We're also very overbought. Last time we were overbought was right here. We were pretty overbought at that point, and the stock corrected from there. And this is the most overbought, and it's been a persistent overbought reading. So there's one again that out of a sector that overall looks poised for a counter trend rally, possibly more, maybe a major, larger trend reversal. This one looks like a potential shorting up. We'll wrap it up here. This has been Randy Finney with Right Side of the Chart. Hope you enjoyed it.